Monday, December 9th, 2024, Maneco 64, home of alternative economics and contrarian views. So am I getting rid of my gold? Am I really scared? Is Michael Saylor right? Gold is going to zero and Bitcoin is going to infinity. Is the chairman of the Federal Reserve right? Gold is really volatile, the most volatile asset along with Bitcoin, and it doesn't hold its value over time. Well, of course, many of you already know my answer to that, but I want to go over why I'm not concerned. And if anything, I'm more and more determined to try to keep as much of my savings as possible in physical gold and silver for that matter. And I want to talk about why there's such a hatred of gold by the powers that be, by Wall Street, by the financial press, and even by the public, because they get brainwashed into thinking that gold is volatile, that gold is a commodity, and that's it. So what I'm going to start with today is an editorial that many of you have heard me talk about over the years. I mean, this channel is about 9 years old now. I mean, time goes by, but it's an editorial from the Financial Times, and you'd think the Financial Times would be aware of how important gold is to the financial system, or has been for thousands of years. But think again, and think again about the Wall Street Journal and mainstream media like CNBC and Bloomberg. They're not keen on gold. And this editorial here, Going Gold, the pointless of holding bullion, continues to sink in. This was written in 2004 in the FT. I don't know who wrote it. They didn't put their name down. But why did I cut this editorial out and laminated it? Well, because by April, this was written in April 2004, April 16th, I wrote down the date. I had already started buying gold. I started in the summer of 2002. And why did I start buying some gold, some physical gold, that is, not the paper representation that's not worth the paper it's printed on? Because my wife and I decided to diversify a little bit from being in a private pension system, not just because the market had gone down after dot-com bubble burst in 2000, but also because it was something different, something kind of special. And that's the thing about gold. Until you buy gold and you hold a gold coin or a gold bar, you don't know how special it is and why it has been gold for thousands of years, and why it holds its purchasing power over thousands of years. And when I bought my first gold coins in 2002, it also led me to look more into the monetary system, because it makes you think, why did they get rid of this? Why are we using pieces of paper and digital entries or book entries in bank accounts as money? Because it's not real money. And it makes you question everything. And by 2004, I was aware of a lot of things already. I had read up on it. So why did I cut this out? Well, because I thought it was pretty outrageous what they wrote here. I was at the train station going to work in the morning. I worked in the city of London. I bought the FT every day, the physical paper. We really didn't have smartphones at that time, so we actually read newspapers, the physical newspaper. And I was actually on the platform waiting for the train, the 6:08 train, I think it was, from my station to London Bridge. In London, I had to be at the desk from 7 a.m. Yeah, we worked long hours from 7 to 5, sometimes 7 to 6. And we'd get home like 6:30, 7 o'clock. So it was a long day. But yeah, I cut this out because I thought it was outrageous. And it says, going gold, the pointlessness of holding bullion continues to sink in. So you see what we're seeing today in terms of what Michael Saylor and Chairman Powell and all the stories about China finding tons of gold, thousands of tons of gold. They're just scare tactics because gold is not just special because it's shiny and heavy and beautiful. And I think it's difficult to argue with that. Actually, the beauty and and the fact that you dig it out of the ground. For example, you dig a treasure from thousands of years ago, or you find a coin if you're out metal detecting, and the gold is the same. It doesn't tarnish. It doesn't really. It's beautiful. It's timeless. I think it was Star Path Academy, who I've had on the channel. He said it. Gold is timeless, and he was right. But fiat paper money, and I've got here a book by Ralph T. Foster, as you can see, Fiat Paper Money, The History and Evolution of Our Currency. And I have to thank my friend from work back in the day at MF Global, my friend Aaron. He got a couple of copies signed by Ralph T. Foster. And one interesting thing is that the inside jacket at the front and at the back is dedicated to the world's worthless paper money. So there you go. It's a long list, and it goes also to the back of the book. So yeah, it's a proven fact that paper money, which is what we have today, and worst of all, the paper money that we have today, that is the major reserve currency of the world, is the dollar. And prior to today, major reserve currencies were always as good as gold, but not the dollar anymore. And that's why when people like Powell and Michael Saylor come out and say gold is going to zero, you need to laugh at that, really. At least I do. So I had this laminated, of course. I got to the office. I showed it to Aaron, I think, my friend Aaron, and I cut it. I cut the editorial. I thought I need to keep this. Because this is just ridiculous. I was kind of angry at the time, but then I thought, why be angry? You know, they're going to be wrong. And I even wrote the price of gold on that day, $400.65. So let's see the reasons why the FT thought gold was going to zero or become pointless. Well, here it goes. The barbarous relic, as Keynes, that old Keynes again, called it, is crumbling to dust. Sounds familiar? Zero dust. When even the venerable N.M. Rothschild has quit the gold market and the Bank of France, among the most stubborn of the official gold bugs, is thinking again about its bullion holdings, the end of gold as an investment has come a little closer. It will not be before time. The fetishization of the shiny yellow metal, decades after it ceased to be used as the anchor of the international monetary system, is a lingering anomaly in modern financial markets. Perhaps Rothschild's last service to the bullion market could be to keep a live gold trader on display behind glass as a as a reminder of a bygone age, like the former coal miners who now make a living giving tours of defunct pits. The one advantage of gold as a reserve asset is that unlike assets based on fiat money, governments cannot make it worthless by inflating it away. Well, there you go. and of course, this was before 2008 and the age of QE, right? But in the era of low inflation, and given that independent inflation targeting central banks are the norm across the industrialized world, that risk has very sharply diminished. Well, I don't think it diminished enough, sharply enough, FT. Indeed, for private and official investors, gold is now a rather risky asset with a nil or low return. The intrinsic value of gold, determined by its use in various industrial processes, is well below its market price. Gold does not grow. So its value to any one investor as an asset is dependent on other investors also holding it as an investment asset. The gold price hangs precariously by its own bootstraps. For private investors to hold gold on this basis is their own foolish affair. For central banks and governments to hold it as a reserve asset is a betrayal of the public on whose behalf they're acting. Despite recent sell-offs, governments and central banks still hold about a fifth of the world's bullion. Their large holdings relative to the size of the market by themselves make gold particularly ineffective as a reserve asset. The very act of official selling of bullion on any large scale to raise cash will itself drive down the price. This danger was amply demonstrated by the UK's unhappy experience trying to sell some of its holdings, gold holdings, announced in 1999. In a sensibly intransparent fashion, the sales sparked such a fall in the global bullion price that a group of central banks signed a concord limiting such sales. That has recently been superseded by a new agreement providing for limited official sales. So maybe that's what Mr. Saylor is thinking about. Just dump the gold, pre-announce it like Gordon Brown did. But that, of course, was Brown's bottom. And, of course, that was a stupid thing to pre-announce the sale. They should have done it on the quiet, like they do everything else, right? Given the pointlessness of holding gold, the speed of its official sell-off scarcely matters unless leaching the gold into the market bit by bit somehow maximizes the return to the public purse by limiting the impact on the price. That would imply irrationality on the part of the market. But then holding gold is irrational in the first place. Perhaps the central banks are right to go slowly. Whatever the speed, the direction is clear. Gold is on its way out as an investment and reserve asset. 3 cheers for that. So the reason why I read this to you is just to show it to you that even one of the top financial publications in the world will come out with fake news, will try to fool you out of your gold. And why is that? Well, I think it's because the people who control the money and the banking system, they control everything. I mean, there is that old saying by Meyer Amschel Rothschild in the 19th century. He said, give me control of a country's money or currency, and I care not who makes the rules. And there's the old saying as well as, and there's that old saying as well, he who has the gold makes the rules, right? So the point of a fiat money-based system, central banking system, is for these people at the top, people like the Rockefellers and others that we don't even know about, to keep control of things, and they can't allow the public in general to be self-reliant, financially independent. They need us dependent in order to justify democracy and politicians saving us and like running our lives and making things better for us, right? So what I'm trying to say is gold is totally against that, because with gold you don't have to go into this fraudulent fiat paper money world. It helps you become financially independent. And why is that? Well, because over time, and by over time I don't mean a month or a year or even 5 years, I mean 10, 20, 30, 40 years. Over time, gold really maintains its purchasing power. And if you read carefully here in this editorial, the FT says that we are in a low inflation world, right? Where central banks are independent and they maintain an inflation target of 2% or maybe even 3%, who knows? But that's not good enough, because over 20 years, 20% or even 3%, or even over 40 years will completely trash the value or the purchasing power of the fiat paper money. And eventually, of course, governments lose control of the inflation, and fiat paper money goes to zero. And if you don't have, as an individual and as a family, I would say generational wise, some of this, you will never become financially independent. And they don't like that, because the only reason we have government is because we're too stupid and too inept, right? And I'm being facetious here, to run our own affairs. And that's why they hate it. They don't want people to be, they want people down in the dumps so they can find, they create the problem, and then, they find the solution. And the solution is always a bad one. It will help you in the short term. In the long term, it will create an even bigger problem. So gold is kryptonite to the statists. It's kryptonite to the bankers. And that's why they hate it. And that's why they have people like Michael Saylor coming out and spouting rubbish like gold is going to zero, because why do you do that? Does he work for the U.S. government? Well, maybe he does. The way he said it, we have to defeat our enemies because they hold gold. And are the Chinese really? Is the Chinese government really? Does it really want its people to be self-reliant and independent? Maybe they do. I mean, we're told though that they're authoritarians and dictators, and that they hate their people. But I mean, look at what China has done over the last 30, 40 years. It's brought hundreds of millions of people out of poverty. Am I saying the Chinese government is going to give people individual freedom? No, but they understand the power of having some gold and why you can't trust fiat money. And they know that the Chinese currency is actually a derivative of the paper dollar. So I think they see the writing on the wall. What about Bitcoin? Well, Bitcoin is a derivative of the paper dollar. Why is it a derivative? Well, because it's denominated in it. And you might say, well, gold is denominated in dollars. Well, in an upside down world it is, but prior to 1933, the dollar was just a weight of gold, and it still is really, technically. If you look at the Constitution, the pound is just a weight of gold as well. The French franc used to be a weight of gold. They've turned things upside down, and so yeah, Bitcoin is a derivative of a paper, of fiat money. So if fiat money collapses, I see Bitcoin collapsing as well, and gold will go to infinity, not the other way around. And what would you rather have, an ounce of this or a Bitcoin? I can't see anything, but you make your decision, of course. You decide. But hopefully what I've said here helps you, if you're thinking of getting some gold and even some silver. I mean, I started buying gold. I was, I think, about 37, 38. So even if you're my age now, 60, I don't think it's too late. And I don't buy gold to make money, because gold is money. Some people buy gold today and they sell it in a month's time because it's going up, because they want more of that thing that goes to zero. It doesn't make sense. Is there a time when you get rid of your gold? Well, gold is money. So when you need to spend it on something that you need or you think is a good value or an investment, you do it. But in a fiat currency world, you try to keep it for as long as possible because of the old Gresham's law. And what is Gresham's law? Well, is that bad money really circulates more than the good money. You try to keep the good money and pay with the bad money, because you don't want to keep the bad money that goes to zero and get rid of your good money. So that's how I see it there. So going gold, going to zero, well, you decide. Hopefully I've convinced you about it by now. And with that, let's quickly look at where the markets are this morning. It's just before 9 a.m. London time. We've got spot gold at $26.48. It's up $14. The high's been 51 and the low's been 26.27. We've got spot silver up 30 cents at 31.26. High's been 35 and the low's been 30.85. Dow futures is down 22 points. NASDAQ 100 futures up 38. S&P futures up 5 points. What about the currencies? Well, British pound is up 0.2%, 127.68. The euro is unchanged, 105.69. Dollar is up slightly versus the yen, 150.37. WTI crude is up 1.4%, trading around 68. High-grade copper is up 2%, 428. What about the treasury market? Well, the 10-year yield is up about 2 basis points at 4.17. And the UK 10-year yield, or the gilt 10-year yield, is at 4.32, up 4 basis points. So with that, I'm going to wish you all a very good day. Take care. Bye.